Good evening. It's Quant Trade Edge. Today is February 28th, 2023. I just wanted to point something out on the natural gas chart. This isn't new. This has been playing out over the last few months, but I will throw in a little trade that is setting up in the current time. So, this is the big rally we had in April, initially on the Ukraine situation. And it looks like we peaked up here in June. And if you look at the absolute high that was achieved, it was 616.5. This low down here is 414.5. The difference between those 2 points is $2.02. So let's just create our rectangle here. And you can see that this whole thing is one big range. And when we finally broke that range in December, the interesting thing is we went down at what's called a measured move, which is this exact $2.02 below 414.5 would be 212.5, and we got to 211.3. So within about a penny of a measured move, this distance being the same as this distance. Now let's get into something more current, and that is, as we got down there to that target of the measured move, we had a very obvious divergence building here. Let's see. The RSI, the momentum was higher when we made this significantly lower low. And another interesting thing to know about structure is, first of all, when you break out of a major range, you're going to have a trend. So we had this trend, and it was what we call an extended run. An extended run just means a lot of closes on one side of the 5-period SMA. And really, before we even broke the range, we had 1, 2, 3, 4, 5, 6, 7-ish closes below the 5 SMA. And then we went on to 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 23. Before we had one close above and then another small extended run below. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And Linda Bradford-Raschke has done a lot of work on this topic of extended runs. It's called the persistency of trend. You can pick any short-term moving average. She likes to use the simple 5-period moving average. And typically when you get at least 7 closes below, you want to bet on that direction. That is an outlier happening once you get above 7. And in this case, we went all the way down to 23. So if you caught this breakdown, you had a target. At that target, you had a divergence. And now if we try to see what's happening now, that's all old news. What's actionable at this point is we now have one swing up greater than the prior swing down. So from our U-turn behavior, this will be the first higher high, then we need a higher low, and then if we turn up from there, which means break through that, then that's a U-turn. We have a trend reversal. So this entire move here is a downtrend. Even with all of this, that's a downtrend. This here is still within a downtrend, but what will change the downtrend to an uptrend is a higher high, which we got already, a higher low, which hasn't happened yet, and then turning up from that higher high. And then we will be in an uptrend. So that is what is setting up in natural gas. You typically want to do this type of homework on every market every day and have a running log in your head of what is setting up and where the opportunities are. And that's usually how you'll be ready to catch those days when the tiny time frame sets up into the longer trend, which are those days when you get 8 to 1, 16 to 1, very asymmetric reward to the risk that you're taking. That's all I had today, keeping them short and sweet, just so that I can actually get back into the scene. I've got a ton of other commitments at the current moment. I do miss you guys. I do love your comments, and do leave questions. I will do my best to address them. I know we've had a couple of questions about the umbrella, and I will work on that. There would probably be a little bit of lesson along with just finding examples. So that's going to take a little bit of time, but it is on my list. Thank you. Have a good evening.